Hey everybody, it's Ricardo Gorski, the founder of Tax One, where we help individuals and businesses pay as little tax as legally possible. And in today's video, we are talking about the UK's November budget that is officially over. And as a big portion of our subscribers are from the UK, I was thinking to make a quick update video, talk about the main tax reforms, some additional information, and most importantly, what you should do now so that you will not suffer from the highest tax burden in UK history. And I have to admit that I really enjoyed watching the debate and the budget live. It was definitely entertaining. And one of the first tax reforms that Rachel Reeves implemented is a mansion tax, which is basically an annual flat tax on every property in the UK that is worth more than £2 million. And let's just say that it is rather interesting that the government wants their piece of the pie from a property that they don't even own themselves, next to all the other property taxes, contributions and charges that already exist. And to me, this mansion tax is actually much worse than most people say, because in my eyes, a mansion tax that focuses on wealthy individuals owning properties is like the little brother of a typical wealth tax. But anyway, let's continue with the next reform. We see a 2% tax increase on all dividend, interest and rental income. This means even higher taxes for business owners, entrepreneurs, investors and property owners. I mean, let's be real, the dividend tax in the UK is already ridiculously high, going as high as almost 40%. This is even higher than in Germany. Anyway, let's continue with national insurance. They are also going to add those charges to other income types that were previously excluded, just as increased stealth taxes, which is something like freezing tax-free thresholds, which the UK is now doing, also rising taxes on savings and pension income, tightening capital gains rules, and of course, widening inheritance tax rules. Those are, in my eyes, the major tax changes that are going to be implemented in the very near future. If you want a complete overview with all details of this budget, then you can look it up at the gov.uk website, where they list all changes here on that website, just as other media channels such as The Guardian, where you can also see other measurements, business taxes and all that, which is going to be implemented over the next few months. And now we also, of course, have further important changes which are not tax reforms per se, but they still affect every single taxpayer in the UK. And number one is a big one, because this is about the abolition of the two-child benefit, which basically means that from next year already, large families will receive benefits for every single child, regardless if these families work or not. Then we also have national insurance contributions, which are going to be lowered for employees, which basically means that payroll costs for businesses will increase, which will make hiring more expensive and, in my eyes, negatively affect the job market. But other than that, obviously, Rachel Reeves also confidently announced huge spending, such as £1.8 billion. Let's make that more beautiful, because it is so beautiful. £1.8 billion for the digital ID, which is an initiative where I'm asking myself, who even agreed to that? Next one is £300 million for improving the NHS. And because they are abolishing the two-child benefit, this will obviously also increase the long-term welfare spending. So with all those announcements and looking at the UK national debt, which is increasing year over year with the total tax gap that the UK has, I'm asking myself, how does the British government want to pay for all of this? Because it is surely not with those tax policies. I'm telling you, debt will keep falling. You can't tax yourself out or into growth. Why? Well, because smart money will always live in a high tax environment. This was the case in the past, this is the case now, and it will be the case in the future. I mean, just look at the millionaire migration. This is one of my most favorite charts at the moment. You just beautifully see how the UK is number one in losing millionaires in 2025 alone. They are going to lose at least 16,500 millionaires, while countries like the UAE, but also Cyprus, where I'm living in, and many other low tax countries are actually gaining millionaire residents. If you want it or not, you need businesses, entrepreneurs, investors, and high net worth individuals in your country to be competitive and attractive to invest in. But Rachel Reeves confidently said in the budget that she's actually proud of changes such as abolishing the non-dom status in the UK, increasing taxes, and whatever else that she's doing. And the ironic thing is that Labour actually talks about growth, competitiveness, and supporting work. But then they do the exact opposite. They created the highest tax environment for people that work, invest, and build. And then they act surprised when people leave. But I remain with my statement that there is currently no incentive to relocate to the UK, and the UK is uninvestable. Now, if you are from the UK and you are watching this video, then you can actually be lucky that they didn't implement a classical exit tax. This means as of today, you can still leave the country without being taxed on your unrealized gains. And if you're interested in leaving the UK and relocating to Dubai, Cyprus, or any other low tax jurisdiction, definitely make sure to reach out to us on tax.one. And if you want to see more videos like that, make sure to subscribe to the channel, and I will see you in the next one.